Hello, everyone. Welcome to the Afternoon Outlook. Dr. Barton Jr. here, coming to you after a small technical snafu to get us up and running with the streaming service. We are online a minute and a half late. My apologies. Once again, an eventful day. Not quite as eventful as we've had before, but that in itself tells us a little bit about what we need to know, because I think there's a couple of big tells we have out there. And today being Friday, the 24th of April, I think the reality gap today that we're looking at is the perception of the strength of the health effects of the COVID and its economic effects versus what the markets are really telling us. And I'm going to give you a pretty interesting look into that today and what that tells me about our near-term market outlook. And a little spoiler alert, I believe it's more bullish than we may suspect for the near term. So I want to talk to you about that. I want to talk to you about a lot of stuff that's behind me. Oh, look at that. I'm not even in the big middle here. Hello, big middle DR. Talking to you here. We've got the Hormel chart up. We'll talk about that in a little while, what's going on there. And several other stocks that we have been talking about that continue to do well and I think have some more upside to run. So what we're going to do here is look at I will drop down to the other side. Let me drop down over here so we can look at our agenda for today. If I can make it show up, there we go. Look at that, right above me it says holds. Okay, major resistance. All right, here we go. So today's modest move. We want to talk about earnings from Intel yesterday. The daily COVID number, not a lot to talk about there. Be really quick. Then we're going to look at the Gilead effect, and I'll tell you why that has given me a very short-term bullishness in my outlook against an intermediate term bearishness and then a long-term very bullishness. We'll get into all that. We got just the quickest of looks at oil. It's starting to settle down a bit. Also, we're going to talk about the sectors, what's going on in the sectors. I'll look at those in depth today because I want to look at a couple of things that are happening there. And the short-term levels as always. Then we have a couple of things for you to look at. Maybe a victory lap or two for those of you who have been long-time survivors of this Afternoon Outlook report. And then obviously throughout your questions. So as a matter of fact, I am going to run over and pull up there. Hi everyone, we'll be getting started. Thank you, loving them. Thank you, Mr. or Ms. Robertson. Reka, glad to have you on always. Gus, hey, Angela, hope everyone's doing well. Good, thank you, thank you. So coming through, folks, doing well here. And that we're looking forward to getting into a couple of these things. Let's talk first about Intel, and we'll pull this off. Let's pull this off. Let's pull up Intel. Here we go. Intel and what they've done today, I think has been pretty impressive. So here is what's happened, and I think we're going to see this happening over and over again. So I think Intel's going to give us some really good insight into what we're going to see from the other really big techs, what we're going to see from Amazon and Facebook and Google or Alphabet, Microsoft and Apple as they report over the next couple of weeks. We're going to see, I think, this Intel effect happen over and over again. And so here's what's happened with Intel. Let's look at this. Intel beforehand, actually, let's go back just a little bit so we can see the data. I mean, that's a very nice chart. You'll remember that we had this period in September and in early September, late August, all of August, where we had the trade wars, where bang, we were having everybody bang around there. Intel broke out of that, and they were really strong all the way up until kind of COVID-19 hit. The economic specter of the global stage. Intel, a very strong, stock doing very well. It had some pullbacks earlier, as did a lot of the semiconductor companies earlier in the year, but late in the year was doing really well. So a strong stock coming into the pandemic. Then it had its pullback, and it had a a deep pullback about the same as the market. If we want to look at it from here, the all-time high is about 69. Here's about 68. We got right down to 44 on Intel. So a 14-point drop off of 68. About not quite a third. So it was a little bit stronger than the market on the way down. But here's what happened today, not to belabor the point too much because I want to talk about this effect for other stocks we're going to watch. What happened today was that Intel reported earnings that were good. They reported revenues that exceeded their expectations, and they guided lower for the second quarter of the year. So that's the quarter that's going to be April, May, June. So for that quarter, they guided lower, and they were hammered down about 5% this morning, trading right down to that 50-period moving average. That, as you can see, even though we've been trading to this one kind of support level there, that really strong support level, it traded right down to it and bounced off of it like a basketball. It was down about 5%. Now it's only down about 1%. So that's a good recovery. And all of that was about news coming forward. And I think we're going to see that over and over again for the strong stocks. So we have a strong stock. All of them, almost all of them all those big ones that I just named, the FANGMA stocks, all of them had a pullback of some sort. Then we're going to hear their earnings, how they did for the quarter. We're going to see if any of them were drastically worse than expected. We're going to see if any of them were better than really bad, and I think we'll see some reaction to that. But then we're going to see what they're saying about what's going to happen in the coming quarter, in the next quarter, and that is going to set the tone, I believe, for all of these stocks. Now, next week, as we approach these earnings, we're going to go through all 5 of the remaining FANGMA stocks, FANGMA. We're going to go through the 5 remaining. Netflix has already reported, and I'll go through each one of those and what expectations are as we approach their earnings. So I hope we can look forward to that. Now, I all of a sudden have my chat box covered up. Hey everybody, there we go. Hello from England, Victor. Thank you for logging in. Glad to have you with us. So here's what we want to look at. In addition to what happened to Intel overnight, we also want to know. Let's see if I can move some things over here so I can see all of my notes. We want to get back to what's happening in the markets, and the daily COVID, there's not much to talk about. I'll pull up a chart really fast for you. We'll look at that. And you can see not much, still flattening out on a 7-day moving average. This is a 7-day moving average of cases in the U.S., confirmed cases in the U.S., still flattening out, which is very good, but not dropping yet. It's not dropping yet. We're still getting that sideways movement. And let's see how that compares. If you look at what's happening in Europe, look how deep Europe is dropping relative to the U.S. It went up, went down, had that one blip. So let's call this their flattening period. And then they've had the big drop. You can see Italy continuing to drop here. You'll see the same for Germany below as it continues to fall off, and the recoveries start to pick way up for Germany. So they're looking good. Spain also big drop-offs, even though they're flattened way off of their highs. So we're waiting for the U.S. chart, which looks more like this, to look like those other Western European charts where they have handled a lot of the COVID response similarly to here, although the lockdown was more severe in Italy for a while there. Okay, so that's really the balance of the COVID. Not a lot going on there from a case number perspective, except for one little point. Let's go ahead and pull that up while we're here. The death toll has topped 50,000 people. So that's about last flu season. It's not the worst flu season we've had, but it's not the best. It's not the lightest flu season we've had either. And it was in the 40,000 number of deaths that were caused attributable to the flu. So people caught the flu and then had to be hospitalized and other things. So that's for the 12 months. It's actually for the whole series of data. We've had our first death reported in the U.S. in February. It's April. In 2 months, we've surpassed that. So the comments that this is just the flu, just like the flu, it's no worse than the flu, really, really, really are not true. And I have written 2 pieces for you this week, along with some great research provided by my team. And I want you to take a close look at them because I published one on Monday about COVID myths. Another one will be coming out today. If you are not yet a subscriber to Straight Up Profits, let's just go there since we're sitting here. Straight Up Profits, there we go. Trading the real story. Let's see here. I'm not even seeing it show up in the archive. All right, well, that one will be in the archive very soon. I'm not sure why it's not showing up here in the, there we go. If you click on archives, you'll see it. Not sure why it's not showing up in the front page. Click on the archive and you'll see it right there. COVID myth busting and how to make good money. The info there is just so solid, and it's really worth your while to figure out what's going on and to understand how I'm balancing these scales of the health effects and economic effects of COVID versus the stimulus in the U.S. So I hope you'll take a look there. And then there's another one coming out later this afternoon or this evening that's going to be the follow-on to this, where we're going to talk about our next subject, and that is the remdesivir and hydrochloroquine and chloroquine progress that's being made or lack thereof right now. So just since we're going to spend a few minutes, I want to give you kind of my big 4, and that's in the report tonight. The 4 reasons why we still have so much uncertainty in the markets and in the medical community about this virus. Let's talk about the big 4. And number 1 is that it is highly transmittable. It really moves from person to person very easily. And that is that it's highly transmittable and it's highly contagious. Once we catch it, our body doesn't deal with it and spit it out like it does with the flu or the common cold or viruses that have been around a long time. That's the word novel. It's a novel coronavirus. Novel means that it hasn't been in humans before, so our bodies don't pick up on it. As a matter of fact, our bodies don't even understand it's there to know to go and attack it because it's different than anything it's ever seen. And that's one of the reasons for this transmittability problem, and one of the reasons why, along with some other very biological, cell-level biological reasons, that our bodies don't fight it very well either. The second reason for all the market uncertainty and for all of our uncertainty in the social distancing world is that it is very selective in how it attacks people. And it's very selective, meaning that when you get it, you don't know if you're going to have a slight chill or you're going to go into the hospital and need to be on a ventilator. And 2 people with similar backgrounds, similar medical stance, similar immune system, we don't know. Husband and wife that are fairly similarly in health. One of them will be sick for a couple days and recover. Another one of them has to go to the hospital and receive severe care, hit the ICU. So that's another reason that we don't understand those kinds of issues. Then the third one is that we certainly don't have any kind of vaccine. So there's no vaccine yet. That's another reason for that we have this big uncertainty in the markets around this thing. So there's no vaccine, and that's going to be a long time coming. But the fourth reason is the one that's really, I think, one of the real drivers, and that is the fourth one and last of our list here is therapy. What happens when you get it? The problem is, and that's what tonight's article is all about, the problem is there's no good therapy. There is no proven way, proven safe and effective way to treat someone. As I talked about yesterday, if you get malaria, we can treat you for that parasite that gets in you. We can treat you for that and get rid of it and return you to health in a vast, vast, vast majority of cases. If you get, or I get, the COVID-19 illness, we are basically hoping that we can treat symptoms medically. When a doctor and the nursing staff, the medical staff works with you, they are basically hoping that they can treat your symptoms and make you comfortable enough that your body can respond and fight off the virus. We don't have a good set of drugs to work on that. And that's why the market was so excited about our next data point from our agenda today. That's why the markets were in the past. Let's go to, as a matter of fact, I have a chart already ready for us here. I want us to look at what's going on with the markets on the top. So we have the SPY, Exchange Traded Fund, on the top, and we have Gilead down here. And what we see here is that when, sorry, let me get my drawing tool fixed back here. So what we have with Gilead is this day, on the 16th of April, at the end of the day, the report came out that a hospital, a large hospital in Chicago, had a doctor doing a review of a trial they were doing with remdesivir that showed really good results. We talked a lot about this already. And Gilead stock shot up, and this is an important number for you, it shot up $9 a share the next day at the peak before it pulled back. Now, at the same point in time, the market shot up from here about 279. It got up and ended the day on a sugar high at 287. So it went up about 8 points, 8 S&P 500 points. That's a lot when you're trading at 280. So that's about 2.5, almost 3% of, it is over 3% of the market that went up that day. Now, yesterday, as we talked about, we covered this yesterday in the Outlook. The news came out of China that a randomized trial, different than what they were doing in Chicago, because Chicago was just treating patients and actually more severe patients with remdesivir, and it was the doctor's report that many of them were being able to leave the hospital. And not a report that was ready to put out. This is a report that was leaked by the World Health Organization, wasn't ready to be put out, hadn't been peer reviewed. They pulled it off their website almost immediately. But just that, telling us that there was no substantial effect of the remdesivir patients versus the others, although the study didn't get to go to its very end, that caused Gilead stock to drop. Guess how much from top to bottom? $9, just like it was before. Up here at about 83.5 to down here at about 74.5. So $9 again. But here's the interesting thing. At the same point in time, the market's drop during the day from the top to the close was only 4 points versus 8. So the market cared half as much about remdesivir not working as it did about it working. That's saying every item of hope, and this is very key in understanding market narrative, every item of hope that we've got has really stoked the markets much more than the disappointing items have pushed the markets down. We've seen that with economic numbers. We've seen that with earnings numbers. And now we're seeing it again with health effect numbers, even when they're pretty well balanced. I mean, actually, to my way of thinking for the stock, I believe that the negative news is much worse than the positive news was good. So that gives us a very key insight into what we can expect for the market. So let's turn to the markets. I'll see if we've got anything, see if we got any new comments. Thanks, Greg, for the kind comments. I enjoy doing them. I hope you enjoy listening as much as I enjoy putting them together. Wow, we have the international crowd weighing in. Glad to have you, Sean, from South Africa. Some of my best friends at church. Two of my students in my youth group there. I help teach youth group and middle school, Sunday school. Two of my favorite kids there are from South Africa. That family, they immigrated to the U.S. and are U.S. citizens now. So glad to have you on. So that is a very interesting interesting for us here, but let's talk about what we do with that to make money, what we do with this knowledge that for now, just for right now, the narrative in the market is very negative. Let's look at what that means for us. Let's pull up the market chart, and I believe this is going to be key in the coming week. So what we're doing here, we're trying to close above one of our key levels. We're trying to close above one of our key levels here, the 50-day moving average. And we've got this next level that's going to be our next highest resistance point that we're going to go through. I believe that with the bad news on remdesivir and that we don't have a near-term therapeutic ace in the hole, if you will, the market has shaken that off pretty readily. And right now, in our teeter-totter balance of COVID effects, health and economic effects versus Fed and congressional stimulus, the stimulus is winning. And we need to bear that in mind and not fight against it, even though I have an intermediate term view that the market will eventually be hit by a lot of this economic news and go down. I don't think in the short term that is the way the market's acting. So we can't act to fight against what the narrative is telling us and what the market's telling us. I believe that it's a really good chance that we're going to break through these two resistance levels next week and maybe even try to challenge this next significant resistance level. I believe that is the highest probability. Then where we go from there, sideways, down, up, that we'll have to let the markets give us some indication, especially as we get through the earnings season. But I think right now, that's the positioning that I have. I'm not looking for a really hard short-term drop right now. Really haven't been looking for much of one, but I figured we were going to drift down on some of these negative earnings, and we really haven't. So the market is giving us, telling us something there. Okay, we've got a note up here before we head on and look at our sectors. We've got a note about Nugget in UGT. Now, for those of you who are in 10-Minute Millionaire Insider, you've been in UGT for quite a while, since down on this pullback. We got in down here right on that day, right on this green day. We got into NUGT back here. And back then it was a $7.90 stock. And what if you, for those of you who are new to the Afternoon Outlook, this is the 3 times, so the leveraged gold miners. So people like Randgold, Newmont, the biggest holding in this ETF, all of those, and then it's leveraged up using derivatives so that it moves 3 times faster than the GDX, the gold miners index. So what happened here? Yes, this thing did go through yesterday a 5-to-1 reverse split. To answer your question, Greg, Sarah already has answered that for you, I think somewhere. Yes, reverse split in Nugget. So even though it's trading at 69, that's really equivalent, if we do the math out, that's equivalent to about 12 and change from our entry level. So we're up about 75% on that trade so far, just on the stock, not even options. So that's been a nice one for us. There, especially after we got shaken out of our UCO trade that didn't go quite so well, but managed our risk by getting out of it. So here we go. So let's see here. Oh, goodness, thank you. Somebody has mentioned I was on the PowerPoint side of the screen. So let me move over to the better side of the screen. Thanks for mentioning that. When I show the PowerPoint, I move over there. So there we go. Sarah, thank you. That's really good. I was probably drawing on my head through some of that. So appreciate it. All right. Let's see. There we go. So yeah, so what happens in a 5-to-1 split if you own 100 shares of stock at $2? Let's do $3. So math. If you own 100 shares, of stock at $3, that's trading at $3, and it does a 5-to-1 split, you end up with 20 shares worth $15 each. so worth $15 each. So it's still, as you can see in both cases, $300 worth of stock. It's just you have fewer shares at a higher price. So that's what Nugget had done to up its price. And a lot ETFs in general, but stocks also will do this as they drop in price. They don't want to go too low, because if the stock price of your stock stays too low for too long, you can get delisted from certain indexes that they have a cap or a bottom, a floor under which they will not allow stocks to stay for too long. Okay, good. So we've moved out of that. Now we're going to look at some sectors. Then we're going to talk about a few stocks that I think still have some legs and why, and one stock that I'm liking on a pullback, as you stealth profits traders already know. So let's look at let's go to our sector chart, and we will move sector listing, and let's move the numbers off of here. Okay, so you can see that we have, let's remind ourselves of where the, let's go up to our top of our list here. The SPYs are trading 0.77, up 0.75% today. Let's see that IWM, the small cap, it's up twice that. It's up, as you can see this two different places as I click on them and we open the chart. One is here. The other one is in this net change column on our chart. Yes, you can see that behind me. Some of you might not be able to see those so well if you don't have this blown up big on your screen. I hope you do. But you can see that the Russell is trading twice as well, twice as big a gain today as the spiders. The diamonds are about a little bit lower than the spiders, and the Qs are in between the SPY, the S&P 500, and the IWM. So all up, as Europe is up across the board too. That's this second list we have here. They're up across the board. Asia up in general, except for one small. We have one small, let's say break even, where South Korea is trading today. So the rest of the world's a little bit mixed. It looks like Brazil has taken a big hit today and is way down, which of course would drag down the whole Latin America fund. And Brazil has been fighting mightily against COVID, and they are one of the ones that did a big hydrochloroquine test. They were doing a trial of using the drug, and it didn't do very well at all. That news is not why this is down, but they are having very big difficulties right now with the pandemic there in Brazil. So what else? We've got junk. So the junk bonds are down. So that's sort of an unusual juxtaposition. When the Russell's up, the risk-on sectors are up. Usually we have junk bonds doing well, not doing quite so well today. So let's see what else. Oil is down a bit, and so are most of the commodities except for copper. Gold was well up today and has pulled back a bit, as you can see on the chart there. So the last thing we want to look at is the sector spiders really quickly. Utilities are flat. Real estate is flat. Oil services, so these are companies like Schlumberger and Halliburton that provide field services to the oil and gas industry. They are down. All the rest of the sectors are up. And retail is having a bit of a resurgence today. I think that's a very limited resurgence. Amazon up. If we look at where it's coming from, Walmart, you can see, is up a little bit. Target, which got hit pretty hard yesterday, is up 4%. So I think that's largely a rebound to an overreaction when Target yesterday said they were extending some employee benefits, raising some some employee payments, how much they're paying their employees, to keep them on the floor, to incentivize them to come and work, be frontline workers to help stock food and the necessities that Target carries for us customers. So that is, so let's see what else we want to look at real quickly. We want to look at XLY, which is discretionary, which is up 1.3%. And let's look at the staples. the stuff we need, it's up also, but discretionary up more, which we would expect on kind of a risk-on or a modestly positive day. So semiconductors are up despite Intel being down, and I think there was a turnaround in that sector this morning after Intel opened lower. I think the sector went up, and I think I'm liking Intel, and I'm liking the whole sector as a follow-on. And you can see it's doing a little bit like the markets. It's come down. It's not banging on the bottom of its 50. It's come down to its 50 and is holding the 50-day moving average. Very important from a trading perspective, from an intermediate trading term, that it's holding this important level. You can see how it bounced around it back in here, held it here, came down and held it again, and finally broke through, acted as resistance. That's how we know that traders and investors are paying attention to a moving average. A moving average either fits the instrument really well at a given point in time, or traders or investors are paying attention to it. Lots of eyeballs on it. And I think this one for semiconductors, it's the latter. I like the semis a lot. AMD we talked about yesterday, and that's one of the ones that's on my radar. We'll pull it up here real quick. AMD is one that I really do like. So you can see it's up near the top of the page. It's up 1.5% today, doing very well. We've got it. Okay, so let's see here. Gilead. What do we think, G-I-L-D? Okay, Joanne, I see your question as well. We'll get to that in a second. So Gilead was down, this big yesterday, opened and traded down this morning and is back up a little bit. And what do I think about Gilead's prospects? I think it's in general already a fairly run $100 billion biotech stock, and I think it is a good average mover going forward. Based on the data that we've seen and the results we've seen so far, I am going to be personally surprised if remdesivir proves to be a highly effective drug in fighting COVID as a therapeutic treatment for COVID. I would love to see that. I would love for that to be the case, because I would love for us to have something near term to turn to as a therapy, as a medical therapeutic agent to use in the fight for folks that get it. The data, early data and the data now don't seem to be supporting that with some, it's kind of a good data sandwich. There's a piece of bad data bread on each side. The earlier data didn't show that much promise. Some of the couple of the meats in between, we saw some good anecdotal data about it and its compassionate use. It looked to be helping. The hospital in Chicago announced that it looked to be helping there. And then, of course, yesterday we got the news out of China, the leaked news that it didn't seem to be of much assistance in that trial. So I don't love Gilead. I don't hate it. I don't think it's going to fall off the chart here. I think it's doing well. If remdesivir even has a modest use in the therapeutic world for COVID, you'll see this continuing to lift. So it's not a bad place to go, Sarah. It's not my first place I would probably go in this space. There's lots of other big companies that are doing really well that have longer term prospects. If we look at Regeneron, they've been really strong. I think if you get any pullback in Regeneron and you can afford a few shares of this $560 to $70 stock, that's one to look at. There are several others that I like in the space as well. So let's see. Let me answer another question, and then I'm going to go over two stocks and two stocks to trade on continued momentum and one to trade on the pullback that we're seeing today. All right. What do you think the market will reach? There's the question. What do you think the market will react to the ord is found out and released either from animal or bio weapon? Yeah, so that's one of the myths that I talked about in the first paper, Joanne, and that is it animal? Did it come from animal origins and then jumped to humans, as many viruses that we've seen recently? Obviously, the avian flu, the bird flu did that. SARS did that, was traced to a bat colony. Ebola did that as well. So many of these have had that animal origin. But the circumstantial evidence of could this have been being studied in a lab and gotten out into the public? Well, there is a I said in the article, there's a non-zero possibility that that's the case. I don't think it really is much of a, I don't think one way or the other, whether we find out it's from animal origins or a lower probability, but a non-zero probability that it was accidentally released. I think the data is very clear. 99% chance that it was not a weaponized virus, because they've done some studies and looked at what's going on with this virus, and it just could not have been produced as a weaponized virus. So if it was being studied and leaked out of the lab through safety procedures, that would be one thing. Or did we find that it's animal origin? Will that give the market a big pop, some certainty of where it came from? I don't think the market has baked in too much that this virus is going to, that the origin of the virus, if it was something that, let's say people are saying, what if that lab in Wuhan, there is a viral lab, a very high level viral lab, a level 4, the highest a level viral lab in the world, the highest classification there in Wuhan. So if that was the origin of the virus actually, and it wasn't from that wet market, would the markets cheer or not? I think the problem with it coming out of the lab, Joanne, is that would mean more tension between China and the rest of the world, especially the U.S. So I think that would not be good news. I think if we find that it's definitively from animal origins and we can get really good science behind that, that would probably be seen as a positive, but not a really big positive like a therapeutic approach that would work. Or we see seasonality. It hasn't really started getting warm yet on the East Coast. We've been in the 50s, a day or two in the 60s. We really haven't gotten warm weather here in the East Coast in the U.S. So if we see some seasonality effects a couple of weeks down the road, I think all of those things would be much more welcome by the market than finding animal origins. Okay, that was a long talk on a short thing. All right, do you have a scan from your book that can be used for Thinkorswim? You can probably program that scan in the book, Martin. I just happen to have a copy of it here on the desk, what he's talking about, the 10-Minute Millionaire, that you can use it in stockcharts.com, and I'm going through some of the calculations. Yes, I believe it will be programmable in the scanner in Thinkorswim or TradeStation or any of those platforms that have really good scanning engines in them. I think you would be able to program that one. Pretty straightforward. It's not a lot of code for sure. Let's see. So some other items, some other stocks in the COVID space. How about if we do a whole special day on COVID stocks on Monday? Read the report tonight. You'll see a handful in the report. We'll go through, look at charts, talk a little bit about fundamentals, and Monday is going to be COVID day. We'll talk about that. Probably Tuesday is going to be Take Back Your Wealth Day. We have a big event coming up. I believe it's next Wednesday that people will be involved with. You'll see something about, and we'll talk about it here so you can make sure to get some information about that, and we'll give a sneak peek. We were going to do that today, but we're trying to work out some things behind the scenes to make sure that this is consistent with everything that we want to talk about next Wednesday. But we'll do that. We'll put that together. But I like that idea of COVID bio stocks. What should we look at there? Yeah, Moderna for sure. Victor, and I think they are near the top of the page. I think they're really good, and I think they've proven their mettle that they have some good technology that's going to be useful for RNA-based vaccines. So meaning it's a different way to develop a vaccine than's been done before. And I think especially, boy, if they get to an end result of being one of the candidates, and yes, they get something that is viable, and maybe we'll probably find more than one viable vaccine as hard as we're working on this. Boy, this stock could take off. I like it better on a pullback because it's kind of richly valued right here. But if they're one of the ones that come up, or the one that come up with the vaccine, they have a phase 1 trial already going on for one of their vaccine solutions. This stock would certainly take off from now. Okay, so let's Yeah, for the Monday COVID plan. Yeah, the LS. I look forward to diving into that. That'll be informative and a lot of fun. So let's talk about two stocks. I'm going to pull this back over here so the screen isn't as jumpy. Let's. Maybe I can give you. Let's see here. Yeah, let's do this. So let's pull up a couple of the stocks that I wanted to talk about today. Both of them that we've talked about before and how well they're doing. Here's Teladoc. And look at this, another huge day, another plus 4% day. I was giving you this way back when we started this series. I wrote about it as well at Straight Up Profits, but we talked about it in this pullback, and I said, this is a stock you've got to keep your eye on. It's the future of medicine. Not just this stock, all of the telemedicine and virtual medicine, medicine at distance stocks. I think that's going to be a new reality. It was a reality before. I've been using Teladoc for about 4 years, this exact service. When you get a sore throat that you're pretty sure has the likings of being something that can be treated with antibiotics, that's something that you often, not always, they don't always prescribe prescription medicines, but if you have the symptoms and all of the proper things, and you can talk to them on a phone, pull up your phone and look at them and talk back and forth and do all of that. I think this is the future of medicine, and this is going to be one of those changes that a stock that did well for the stay-at-home crowd that is going to transition as the paradigm mental shift transitions in the country. That this will be a stock that will play really well in that post-COVID world. And I don't love it at 195. I think, right there you're buying the top, and could it go on from here? Sure, I believe it will. But I also believe that we're going to get a chance to buy it back at at 180 for sure. Probably we're going to get a good look at 160 again before this takes off. So I would not be surprised to see this have a pullback that was playable in the future. Another one that's taking off despite all of the negative publicity is Zoom. And we talked about this on this pullback when they had the security problems and people were Zoom bombing. So they were breaking into teleconferences, and there were found some security flaws with Zoom's Zoom's product line. And I told you right then that the Department of Homeland Security had done a check on how they were working, how they were progressing, and they gave them the check mark of approval on how they were progressing in their security. They've made a very big strides, and look at this. When we were talking about it, it was between 110 and 120. It's now up at 175. It was at 180 this morning. Again, a paradigm change. We are going to be using this technology. What's different about Zoom from Citrix, who's done really well? They already reported. Here's one big difference. Zoom will not report their earnings until early June. So we've got another month, 5 weeks, maybe 5 to 6 weeks before they report. And I think one of the things that we're seeing in these COVID-oriented stocks is that you're buying the rumor all the way up. Boy, we're guessing Zoom's doing great. I believe Zoom's doing great. Look at the stock. Everything's doing, and it's going to keep doing great right up until the report, like Citrix, who gave their report yesterday before the market opened. Whoops, I got my letters in the wrong order. There we go. Let's get rid of this drawing. So, and they reported yesterday morning, and it was buy the rumor, buy the rumor, buy the rumor, sell the news. Here's where they opened, and they closed lower yesterday. They're bouncing back, a nice 2% recovery today, and they're going to do well going forward too. But this process of buying these COVID stocks ahead of earnings, I think is going to pay great dividends for us. We'll talk about a couple of plays to do that as we go, as we get out 1 to 2 weeks from some of these earnings, how we want to play those. So let's look at. So those are the two that have taken off and are going to keep going. And we will look at. I know somebody else. Thanks for the COVID plan. Somebody asks for gold and silver stocks continue upwards. I think so. They'll have down days for surprises. Do you have your favorite gold and silver stocks? Let me give you another list of that because, there are some that I really like. Newmont is so big, it's probably not the one that's going to move the most if we really get a big jump. So that's another good list of stocks. One that I have been following and have traded in and out of has been Barrick. Here's Barrick, and they are peaking today like almost everyone. Here's Newmont. All of them up at the top of the page. And I think gold in this fiat currency world is going to continue to do well, though, yes, you're exactly right, Martin. They're going to be bouncing up and down. Let's see. There was one other stock I wanted to tell you about. Then we'll look at Etsy, Victor, before we're done. So let's look at Hormel, everybody. This stock has had some problems. They had to close a few of their packing plants. Theirs were smaller, 100 people, not like the big 3,700 person Smithfield plant that had to be closed last week. They've been pulling back. I like them. You can see we've got this sideways 50-period moving average here as support level. Also, we have this old support level here from when they had that double bottom and took off earlier. I think the meat processors, like most food processors, are going to do well because we have to keep them working. We have to find ways. The governors of those states where those plants are shut down, I think the last one, Hormel, was shut down in Iowa, and another big plant was shut down in Iowa. They're going to work to put the procedures in place so that we can get those workers, especially those ones that have to work in close proximity, like when you're doing something very manual, very hands-on, like meat processing, that they will be able to work safely, to get the procedures to do it, to get the right personal protective equipment to do it. And I believe we will see these companies coming through and doing that. And when they do, I believe Hormel is going to be a very good stock to own. So there we go. We've got a couple of more questions. Yeah, we've looked at Etsy a couple of times. It has blown out the top. Who knows when Etsy has earnings? Who can beat me to their earnings, their favorite earnings site? I'll check it out. That's another one of those that will probably be a run up into earnings. Buy the rumor, sell the news. They're up big again today. I'm looking earnings date, May 6th, so that's coming up. So let's look at Etsy. Selling a lot of face masks, I guess, and a lot of other stuff. I'll tell you, Etsy actually was a godsend for a lot of people, and that had to stay home, that couldn't do their normal jobs, and started to get crafty, get handy, put together some different things, like some designer masks and some fun things that were like that, so you could wear a mask and have a little flair, and all kinds of other things too. That finding ways to make stuff for that people needed. I mean, 35 to 65, 66, that's tough to argue with. A 30-31 point bounce up is even more off the bottom. It's doubled off of its all-time low. It doubled with the rest. It bottomed with the rest of the market. And I think a lot of these online retailers are just doing really well, like you're seeing with Etsy right now. So yeah, somebody asked for my favorite big cap, and I still think that Amazon is going to continue to excel. I still like Microsoft. Both of those, if you're looking for the really big caps, they fall into the order of did really well before all of the COVID and are going to do well after. Amazon, actually, you might have heard my spot with Charles Payne on Fox Business back on the 13th. He asked me to bring my favorite one stock for the first half of the year, and I brought him Amazon, and it had been trailing. It had not been going up as my Apple had been exploding at this point in time, and I said Amazon is going to play catch up, and obviously we didn't know about the extent of COVID at that time, but I still like that coming out of this. They're going to be doing a lot of really good things. They're going to open their delivery service, which is going to be another revenue arm for them. They also, if you'll remember, quietly getting into the health field, looking to do not only just medicines and pharmaceuticals, but they're also, they had are working with Warren Buffett and JP Morgan. They formed a consortium to look at the online possibilities for medicine. So lots of things going to be coming out of Amazon. I think still more upside for that stock that's done so very well. Okay, we're going to go back and look. All right, we'll take one more and then we got to go. It's 22 minutes past. Keep you folks so long that you're not going to be able to get any work done while you're working at home. So Jerry, you want to look at Honeywell. I like all the people in this space, and the reason I think that Honeywell, you see, if you look at Honeywell, you look at one of my favorites in the space, Lockheed, that haven't done as well as the other stocks. They're not big high growth stocks. So when you have this Fed money coming in, these stocks pushing up, and we're having this risk on time that we're seeing, they're not doing quite so well. I like Honeywell. If you had to make me pick one defense stock, I think I would pick Lockheed for several reasons. I like Lockheed's, I like their cybersecurity division. They are probably best of the best at cybersecurity. A few people know that about them, and that's one of the reasons I like them. But you know, I can't find fault with any of the defense stocks going into the election. You know, neither side's going to say let's cut back on defense. So I like the defense stocks going into November. All right, folks. Thank you so much for the time, for staying over with me again. We have a weekend coming up. May your weekend be filled with joyous little bits and joyous big bits. May it be filled with helping others around you, whether that's with a donation, with some money for somebody who's out of work, with helping somebody who can't get to the store or shouldn't be going to the store because they're at risk. Whatever you can do to help out, that you would be following the golden rule and helping somebody out who really needs it this weekend. I'll look forward to looking for those opportunities myself. It's one of the great ways we can add joy to the world in this time where we are doing something completely different than we've ever done before. So thanks again for being here. If you got a question or two that I haven't gotten to, folks, type it in the box. I'll stay after we shut down the live stream and chat with you via keyboard for a moment or two longer. So as always, just wish you the best of weekends. Stay safe out there. Great trading. God bless you.